Okay, let's move on to the introduction of SME finance. What is SME? It is small and medium enterprises. Firms are likely to be unquoted, and the ownership of business is restricted to few individuals, typically family group. Okay, but they are not an individual business. What is individual business? Individual business is those business with what we say is micro business that are normally regarded as those very small business and what we call maybe sole proprietorship. Okay, it means the owner and the employee, they are just one man to work for both roles. Okay, he is also the owner and also the employee. So what is the problem of SME financing? The problem of uncertainty due to lack of business history or record. Uncertainty. Okay, the problem is because the company may be a startup or will be new in history, so it has no enough of business history or track record for the bank to make the lending decision, and also the assets, okay, are very limited. The company has no, it's not a big company owning, for example, like a piece of land or even the buildings, to make it can make the loans with the bank by putting those assets as a security. So it has no assets to secure the loans. And the sources of finance, a lot of items can be used as sources of finance here. You can see the different items like the owner financing, the overdraft financing, bank loans, trade credit, leasing, factoring. Okay, all these items here are mainly from the bank. Okay, we mentioned in the sources of finance like bank facility, remember? Bank facility. Okay, in the bank facility letter, maybe the company has those facilities like the overdraft financing, the bank loans, trade credit, factoring. Okay, for example. And for here, business angel financing, it means some wealthy individuals would like to provide the financing to the SME. And venture capital financing, it means some VC venture capitalists would like to invest some startup or new companies, and because of their potential to grow in future. And we also mentioned about source of finance for SME, some kind of government aids. Okay, maybe it's a grant, or a loan scheme, or as a guarantor. Okay, government can be a guarantor of a loan issued of the loan, so that the company has more power to ask the bank to lend them money because it has the government as the backup, as the guarantor. Also, the company can choose to be listed in the AIM, alternative investment market. Okay, this AIM is for small enterprise to be listed in the market. So next we move on. We talk about venture capital finance. Venture capital fund simply means equity capital available to small and growing business. So the key point is here is the money available to those small and growing. Important word is growing. Okay, if you are only a small business, maybe you open a small restaurant, but nearby you have other 3 restaurants competing with you, and your dishes have no features or no uniqueness, and your taste is not very fantastic, then just a so-so. Okay, maybe you only can make money for life, but maybe not a big business or a growing business. So venture capital fund is only interest on those small and growing business. Okay, growing business is very important to them. Venture capitalist or venture capital institution is an institution specializing in providing equity capital fund to small business for the motive of profit seeking. So they have the intention to make profit. How they make profit? They invest today or invest in your company today and sell your company shares some days later to make profit. Okay, here's the point. Invest in your company today and then sell your company shares some days later to make profit. So their motive to make profit. Okay, they are not for charity. Okay, they would like just invest in your company because they see your potentials and then sell it to make profit in future. So what types of investment by venture capitalists? Okay, we have some. First of all, startup. Startup is at the concept stage only. Okay, maybe the business has some operations, but it has only a concept and it has no solid business model how to turn the business into a profitable business. Okay, maybe there's selling some products or even just at the innovation stage to develop a new product, but it's not launched in the market yet. So in the concept stage. And the next is growth capital. It's a bit better, the business at the very early stage. Okay. And for example, the product design is already here. Some testing has already done. And it needs money. The company needs money for the production. So for the startup, maybe just an idea. Okay, an idea. There's no solid research result of those products or those ideas will come into commercial practice or commercial world. But for growth capital, it means the company has already the ideas has already come into the products or services. So maybe it needs money to grow or for production. And management buyouts or management buy-in is different. Okay, what is management buyout? Or what we call MBO? Okay, well, management buyout means the management inside the company or within the company buys the shares from major shareholders. Okay, it's the management buyout. For management buy-in, it's different. Okay, it is the management or people outside the company buy the company shares. Okay, it is management buy-in. They just buy from the outsider, or the outsider buy the company shares, and they will sit in the company's management board. Okay. And share purchases, it means those venture capitalists invest in the company already listed in the market. So they have some real business, is running and is in operate. So it is less risky. And also final but not the list is recoveries. Recoveries means the VC provide the fundings to a company which is in the financial difficulty, or even the company is required to do some restructuring, no matter in terms of its capital structure or organization structure. Here is about government aids. There are different types of government aids to the market, like the enterprise finance guarantee, like enterprise and European Regional Development Fund, enterprise investment scheme, and also venture capital trust (VCT). So here I write down some points. The keywords here is under this different government aid scheme. Okay, remember in general it has 3 or 4 types. Okay, first of all is about the grants. So it means the government gives you the money, and the government is not required to for you to pay back to them. Okay, it's a grant, like the European Regional Development Fund. Okay, and also there's a loan scheme. Maybe that's the government provides you some funding, but it's a loan. You have to repay the loan, or the government can be a guarantor, so provide a guarantee to you to raise the bank loan. And the government can line up different investors to you for the equity part, for the equity investment, for SME. Okay.